May profits be upon you. I want to take a good look at pound New Zealand dollar, pound New Zealand dollar. All right. We're looking on the weekly. And what we can see is that price kind of went sideways, ranged, big, wide ranging range. This is one of the reasons why pound New Zealand dollar is not my favorite market to trade, because of the way it moves and it's kind of wicky. However, what we can see is that we made a lower high here, we made a lower low there, right? Swept this high, went sideways, we chopped down, we failed to make a new low. Price came up, swept that high. So we swept both of these highs on the way up to going higher. Got it? Okay. Took this high out right there and it immediately fell down. Okay. Did we reach a point of mitigation? Yes, we did. Because if we go to the order block that was formed over here, we can see on a 2-week, it's well formed. On the 2-week, we can see that it was formed here and the top and the high of it here, right? This is a zone of demand, a zone of supply, which we reached. Okay, we go back to the 1 week. Here we are. All right, I'm going to refine this down to here. Okay, now, and we see that we had a very strong and very bearish, a lot of momentum to the downside, even breaking this area here. All right, this was demand. This was demand, and the momentum was so strong, we didn't even get a reaction off of it. Just ran straight through. So this is broken. Why is that significant? Because when you break demand in this fashion, when price comes back up the other way, it's going to run into that. And that's where a high probability short can be taken. For sure. You understand? Okay. So we'll keep an eye out for this. We'll keep an eye out for that. Okay. All right. So where are we at now? How do we get in on shorts here? Well, we have to wait for a pullback. That's the long and short of it. All right. If we go to the daily, we'll take a closer look at the price action. All right. We can see, we can see the reaction to this supply here. Right there. This is what I want. This is why I key in on these areas. This is your demand zone here. And you have a reaction here. And this is where you could take a high probability short when price decides to return to it. Let's see if I can get this thing to act right. Why won't it act right? Okay. I was about to say, man. All right. I'm waiting for price to come back up here. I'm going to look at this the whole area when it does come back. Supply. Okay. All right. So this is where I'm going to be looking. This is where I'm going to react. Once price gives me a reaction on the lower time frames, I'm going to come down to the 15, and I'm going to look for price to come in here and round over. Yeah. Okay. That's for the short. If it decides to come back, something has to cause it to come back, right? Something has to cause it to return to reverse. And we have a demand zone right here. Now, the way we have price coming down in there, it's coming in hot, right? I'm expecting that price may not hold. You know, the demand may not hold here. Let me make this the right color. All right, the demand may not hold here. It may fail just like this one did. right? But I do expect a reaction. So what we're going to do is look here on the lower time frames for indication that price is shifting from bearish to bullish momentum, right? And this is what I would be on the lookout for. All right. I'm just reading the momentum. I'm reading the fact that it already broke through a demand zone. All right. We had a reaction here. And when you play the extreme of the reactions to these demand zones that are eventually broken, when price does return to it, it's a good probability for a short. Okay. There's a lot of inefficiency in this move here. This is an imbalanced move leading up to a zone of supply. And that's what you want to see. Okay. So that is the setup I'm looking for. I'm thinking that price is going to continue bearishly. And if we zoom out, why would we think this low is in danger? Why? Well, it didn't break those highs. Came down, took that high out, but it didn't take out these highs. All right, and this started the range, and we might get a small breakout of the range here, but we didn't make a higher high. So I'm thinking a lower low is probably going to be made after this failure. We'll see how price reacts here. We might have a bias in our minds, but we have to read what's in front of us. So if price reacts here and then travels off here and reverses here, this becomes a high with a higher low and a higher high, right? You know, that it turns around. But I'm thinking that we're going to go lower because of how much momentum is in this this market. Sellers are in control. Sellers are in control when they break these demand zones. Okay, I'm right on this one right now. What I would do is not only go down and check my lower time frames. We got the 4 hour here, so we can see that supply very clearly, right? But what I would do is go down to the 15. That's where I wanted to take you to in the first place. I don't know why I didn't do that earlier. Okay, come down to the 15 and we see price come into our POI. And what am I looking for? I'm looking for the same thing I always look for, a low to be broken. All right. And when it's broken, I go to the high, the highest point before that low was made, which is here, that swing. And when that's broken here, what do we have? We have an early indication that price may want to go higher. Once it touches that line, once it touches the swing high, the swing point from that low, the swing back and the lower low, once it breaks that swing high, then I'm looking for price to return to the origin, the impulsing order block here. And look how close it came. Ha ha. Now understand something. Just because it did this doesn't mean you missed. All right. A lot of times you'll see it come down twice, 2 times, or 3 times, because the first one was an inducement to get people to take longs early so that price could come back and take their stop losses out and then go up. All right. We have an early indication here. Price did meet that high. So I'm looking for price to come down here in this area. And maybe give us a what do you call it? A counter trend trade, short term, that'll take us up to that POI. I was hoping that our price could make it to here, that pullback, so that we can take it further short. Now, it may not, that might be a big ask on the 15-minute, right? May not make it up that high, all right? But I'm looking for price to go in that direction. So, and I'm looking for it to turn around here. So this is where I would this is where I would look for a short-term play. All right, again, it's just a short-term play. Let's take a good look at it. A short-term play here, just a reaction, come back here. All right, and then drop. That's it. That's it. We're going to I'm just looking to play the extreme of the reaction to this broken demand zone, and further, looking for the continuation bearish. That's what I'm looking for. That's what the arrow's for. All right, if that helps. Okay, so we'll look hard on the 15-minute time frame and see if we get some follow through. Okay, that is what I'm looking for a nice intraday trade. On the open or between Sunday and Monday, right? All right. If you like what you see, make sure you slam that doggone like button and hit the subscribe so you can catch the updates. Check the community tab on my channel to catch my most up-to-date information I can give you. And do not forget to join us in the free Telegram for Lions Den FX. All right, I will see you in the next video. Enjoy the rest of your weekend.